Thinking about buying a home but not sure where mortgage rates are right now? In today's update, we're breaking down the latest average rate for conventional, FHA, and VA, and also CalHFA down payment assistance loans, and what each one means for your buying power. My name is Bryan Marota, a Southern California realtor, helping first-time buyers and families make smart moves in this market. Before we get into the numbers, let's talk about why this matters. Even a small rate change, say a 0.5%, can shift your monthly payment by hundreds of dollars. Understanding which loan type fits your situation can literally be the difference between buying your first home this year or waiting another 12 months. Let's start with conventional loans. These are the most common loan types for buyers with stronger credit and at least 3% down. They often have slightly higher interest rate compared to FHA or VA loans, but the big advantage is once you reach 20% equity, your private mortgage insurance drops off completely, making your monthly payment lower and more affordable in the long term. The current average conventional mortgage rate at the moment is 6.34%. So if you're buying around the home price range of $600,000 going 3% down, that's roughly $4,700 a month for your mortgage payment with this interest rate and in this purchase price. That is your total monthly payment would be. Next up, FHA loans. These are designed for first-time buyers or anyone with mid-range credit score or limited savings. You can qualify with as little as 3.5% down, and FHA interest rates are usually slightly lower than the conventional interest rate. The trade-off is a small mortgage insurance premium is added into the monthly payment, but for many buyers, it's what makes buying a home possible. Right now, the FHA interest rate is hovering around 6.03%, and if you were to buy a house at $600,000, going 3.5% down with this FHA average interest rate, your monthly payment would be around $4,500 a month going FHA loan. Now for our veterans and active duty service members, the VA loan is hands down one of the best programs out there that you can go with. No down payment is required, no monthly mortgage insurance like the FHA loan, and often one of the lowest interest rates available. The current VA average interest rate is sitting around 6.03%, making it one of the most affordable loan programs out there that you can go with when buying a home. Now, let's talk about CalHFA loans, California Housing Finance Agency programs that help with down payment and closing cost assistance. Rates are usually a bit higher than the standard FHA or conventional loan since you're receiving financial help upfront from the state, but that trade-off can be huge if you're short on funds. Today's CalHFA average interest rate is sitting around 6.5%, and depending on your income and area, you may qualify for 3 to 5% down and assistance from the state. So what's the takeaway? Even though rates move week to week, there are still plenty of opportunities, especially if you understand which loan best fits your goals. Sometimes FHA or CalHFA makes more sense than a conventional loan, or if you're a veteran, VA is almost always the clear winner to go with. But the smartest move is to have your lender run a side-by-side comparison on all four loan types and seeing what's best for your scenario. If you'd like me to connect you with a trusted local lender or run numbers based on your situation, send me a quick DM on Instagram at Bryan_Marota, or feel free to text me at my personal cell at 562-484-8138. And if you found this helpful, hit that subscribe button. I post market updates, rate breakdowns, and home buyer tips every week to help you make a confident real estate move here in Southern California. Thank you for watching.